Hello traders, welcome to the weekly outlook and setups volume 281. Iliya here. You know what we're going to be doing, just jumping straight into the market, having a look what is happening right now, and of course what we can expect for the upcoming week, because we're trading in some crazy times right now. So without further ado, let's jump into it and see what is happening. As usual, let's start with the economic calendar. Just have a quick glance here. Monday we have nothing. Tuesday we have nothing. Wednesday we have meeting minutes, which is not volatile because it's just the minutes, right? So nothing much new. NZD cash rate. So for the NZD traders, you gotta watch out for this. And then on Thursday is the highlight day. So we're having CPI. All right, very important to be watching out, and also unemployment claims, very important Thursday. And then on Friday also we have PPI here for the US dollar and consumer sentiment and inflation expectations. So Thursday and Friday look like the big highlight of this week. However, right now your best friend is not the economic calendar. Your best friend is gonna be Financial Times, CNBC, Wall Street Journal, and pretty much news outlets, because with the tariffs right now developments, right, which is officially taking place today on the 5th of April, the 10% universal tariffs are imposed to all countries right now. But on the 9th of April, he's going to be announcing those reciprocal tariffs to those 60 countries that are taxing the US, as he says, right? So we are going to be having a lot of volatility based on how all of these countries are going to respond, okay, to Trump's tariffs. China is already responding, for example, with retaliatory measures, right? So they're also bumping their tariffs. So it is going to get crazy. A lot of fears about recession and stuff, which I do think definitely could be the case. So without further ado, let's actually jump into the charts and we're going to talk more about that. There are so many prop firms out there, but the one I prefer is FundedNext. First off, they have multiple plans, but my favorite is the Stellar plan, because you actually get paid to pass your challenge, which is a huge incentive to treat it professionally. They offer a 95% profit split, and payouts hit your bank account in under 24 hours, or else you get paid $1,000. FundedNext offers competitive profit targets and crazy affordable pricing. Like for just $32, you can control $5,000 account on their Stellar Lite plan. It's crazy value, and they accept all payment methods: credit card, PayPal, even crypto. FundedNext is well established in the UAE with a strong reputation, rated 4.6 on Trustpilot with over 27k reviews. I trade with them, my community trades with them, and we love them. Now it's your turn. Use the link in the description plus code FANATICFN for 120% refund when you pass your challenge. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody. And the classroom here is a full course that I've never shared anywhere. So make sure to join. It's the first link in the description. As always, we're gonna get started with the Dixie, okay? Now, it is very key to do a little bit more studying on how these tariffs can potentially impact the dollar. And one key fundamental question to ask is, where is money flowing right now? Okay, so it's absolutely exiting the stock market, index funds, and everything. Where is it flowing to? We have seen that gold has been a great safe haven, right? So a lot of money has been flowing into gold. But last week, the fear and the panic was so big that even the dollar flushed, the gold flushed, indices flushed, everything flushed. So money could potentially be going towards treasury bonds, right? Some very safe assets, and of course, cash. Okay, but again, like, I definitely have to do a little bit more study on the dollar development and how the dollar, of course, will react to these tariffs. I did a lot of study in terms of the stock market as well. I have been extremely concentrated because this is a generational opportunity right now for investments, especially in stocks, index funds, and stuff like this. So since pretty much March, I have invested a lot, and my portfolio is really down, because I have been buying the dip, and the dip keeps dipping, okay? But as long as you dollar cost average strategically, you're gonna be fine. So currently the dollar, of course, we have been seeing that bearish pressure, and it's still moving into that range, right? So we came in here, took out the high, but then we did not persist above it, and right now it's falling back down. Well, what is logical to potentially happen? I would say we could be attacking that low here and getting towards that round number of 100 on the DXY. We're reacting from that monthly imbalance, but we kind of already did that reaction, right? So there it is. We kind of tapped in, reacted. And if you remember last week, of course, we had a look at this weekly bearish imbalance. And then of course I said, well, likely we are going to be attacking the low here. And I personally have not taken a single trade on Forex this week. And my community, a lot of my serious community members as well, we didn't touch Forex this week, well, simply because we waited for the tariff day. And before that, it was absolute chop. And even after that, it was also absolute, well, not chop, but then it was pretty hard to get any sort of opportunity. So the market is right now filling that last gap here. All right. And it reacted very violently. So a pretty large weekly candle. Now, of course, the key question is what is going to be happening afterwards. Well, it is very tricky right now. And you can see here, I haven't really traded Forex for a very long time. And simply because if you have a look at all that price action here, of course, this is if you use imbalances, which is what I do. There hasn't been a single daily imbalance since here. And that was on the 6th of March. So from the 6th of March, today is the 5th of April, 1 month, we did not have a single daily imbalance here within that range. What does that tell me? Uncertainty, right? And of course, lack of momentum. And I usually do not trade when the daily time frame is not clear. I always look at the hourly time frame, but if the daily is unclear, guess what that tells you? That the hourly is also going to be unclear. And if the hourly is unclear, that also tells you that the 1 hourly and the rest are also going to be unclear. So currently it is it's very strange here. This, I would say, is an imbalance. It is also kind of a gap here. Friday is an inside bar. NFP, we had the tariff, pretty much the tariff got announced Wednesday in the evening, then we gapped down, and that is pretty much the result of it. And right now we're starting to recover, but again, is it a recovery or are we just pulling back in order to continue going lower? Now again, guys, currently I always say this, even if we're trading in normal market conditions, you never know what is going to happen, so you just have to react and not predict too much. Because right now I can say, okay, the daily time frame is bearish. Like this looks like a pretty good zone. Like this overall area here is also pretty good break and retest area. This whole buy to sell, right? We can come back to retest that and potentially continue going long. Now, how did the market, sorry, to go short, how did the market close is by creating this hourly bullish imbalance here. So that could be an early week, for example, Monday, Tuesday. This can potentially push us into these higher levels here, into that daily imbalance. And then from there, if I start seeing the bearish alignments and of course the dollar continuing the weakness, I would be looking to go short. Okay, but currently I really haven't touched the Forex market for a very long time, and all I'm just waiting for is a little bit more clarity, a little bit more direction, a little bit on the daily time frame to get a bit more cleaner, and only then I'm going to start deploying, of course, my high probability setups. Because I have increased my risk as well, because I've turned into a more really one shot, one kill kind of guy, right? So I'm just waiting for these 1 or 2 good setups per week. And if they're there, I'm going to take them with bigger risk. And there hasn't been such a setup in a very long time for me personally, but I've been killing futures, right? Where I scalp. So this is my DXY right now. Short-term bullishness into this zone, into this gap right here, daily imbalance, and then from there, if we start seeing the shift on the hourly and on the 1 hourly time frame, I will be looking for continuous shorts. Now, of course, that could be, things can change very quickly. This can very well be, as I'm going to show you on GU, this can very well be a very nice range, a very nice manipulation. And right now, guess what? We can be, this can be the V shape, in and out, right? And the market can start recovering, for example, going towards that high. This is another development that I see, but I believe this is only going to be happening if the market meets some optimism. So maybe some countries start to respond positively to the tariffs, they drop their defenses and stuff like this. That could be a good thing to happen for the dollar to increase. But if not, I do believe it could continue falling. But also the other question is regarding the dollar, right? Are investors going to start stacking on cash? Because if they do, okay, and if they're exiting stocks, then they get turned into dollars, for example, then the dollar could potentially also gain some strength, okay? So let's see. Again, as I keep saying always, let's flow with the market. Let's see what happens. I'm overall bearish for now, but of course, if the market keeps showing me bullishness, I will be the first one to long it. Euro dollar as well, right? So we can say, all right, it's heading towards that high here. We had this very nice V shape as well. We went down and right now we're coming back up. Right now it's a brand new monthly candle. It looks like it wants to form a monthly bullish imbalance, but of course we're not going to wait for that because we have 25 days for that to close. So I'm immediately going to be transferring onto the weekly time frame, which was pretty nice. Again, we had that weekly imbalance here. We tapped it this week, then we consolidated inside it this week, and then of course that week expanded, taking us into the very last kind of the last barrier here, which is this what I call reaction areas. Okay, so those are old untested imbalances, blocks, and pretty much any of the tools that I use, the market tends to react from them. And we can see we got kind of quite much above it, and then we rejected very nicely. And like, this is a pretty large wick here. Like, only the wick is 180 pips. Like, this week we moved 370 pips, which is quite a lot, right? A lot of volatility. But again, if you carefully study it, since last week here, little chop, chop, chop. There is Monday chop, Tuesday chop, Wednesday kind of towards the end of the day we got a little impulse, and pretty much Thursday did all the damage, and then Friday also kind of gave a little bit of a pullback. Now, what I do not like once again on EU is we did not form a daily imbalance. Like, when is this market going to give me some daily imbalances? Similarly, again to the DXY on EU, the last imbalance here was on the 6th of March. Today is the 6th of April, almost. We haven't had a daily imbalance. So what does that tell me? Again, lack of momentum, lack of clarity in the market. I don't want to be trading this. Because again, right now, like, massive move up and a massive move down, invalidating a new daily bullish imbalance, well, this to me is kind of a red flag. And then if you go to the 4-hourly time frame, right, we're tapping into this. We had a massive push, and then the market failed to really follow through and continue pushing higher, but it reversed. And now again, the key question right now is this a pullback, or is it a reversal to go lower? Now, of course, we're tapping into levels like this, but you can even see these 4-hourly imbalances. They're also not holding. We had the first one here, which is what I expected to potentially hold. There we go. It tapped in, it tries to push, invalidates, comes into the lower one. It again, if you just study the candle anatomy, it also tries to push, it fails, and then of course we get these kind of reaction areas here get broken. And that makes me think that we could potentially go lower to seek something else, but there is nothing else to potentially stop the market down there. Nothing. Maybe the last resort is going to be this kind of OB here, that sell candle before the buy. Okay, but then again, is this market going to go long or short right now? I don't know. I do not also have a short thesis because we do not have 4-hourly bearish imbalances. So there is also no momentum to the downside. So again, unfortunately, guys, we have to wait for Monday to pass. We have to wait for some price action to print. And then, of course, we're going to know what is going to be happening. Again, I'm going to have two scenarios once again. If the market starts printing bearish order flow towards the downside with 4-hourly bearish imbalances, I'm going to be starting to target these kind of lows here. Because there is nothing anymore here to stop the market from attacking the liquidity, all of these flat lows. But of course, if the market finds some support, for example, we're also currently retesting this very large area. Okay, we're kind of this massive sell to buy. The market is again breaking, retesting it right now. So if it can find the base from this sort of level, and of course, how will we know? Well, guess what? The market is going to start moving higher. It's that simple. Wait for it to start popping higher, create a 4-hourly bullish imbalance, and then of course, I'm going to start targeting the liquidity levels in the form of this high, and then of course we have the very, very major high here to the left. Okay, but first I really need to see that bullishness, which means that the DXY should also go short. Okay, so let's see. This is my outlook on EU. Now again, fundamentally it is very 50-50, right? The EU are kind of some countries are saying we want to cooperate, some countries are saying, well, we want to become like an independent nation and like solely rely on the EU, and like it's very mixed up for the currency. So still it's even hard for me to understand. So if any of you have any fundamental comments on that, they're welcome. Let me know. On the other hand, the pound is extremely interesting. Look at that crazy rejection candle right here. So the monthly time frame swept the previous monthly high right now, and it looks like he wants to really reject going lower. And if you remember here, we had that weekly imbalance for a very long time, but we're looking at it for it to tap like for 3 weeks. It did not. Massively expanded, taking us again into that reaction area here on the weekly, similar that we have on EU. And then we massively dropped from there, taking us all the way into that weekly imbalance. So again here, like if you ask me, I would say, well, it's like the most recent order flow here is definitely bullish, and right now we're tapping into that weekly bullish imbalance. But this weekly candle here scares me. Okay, and usually when you get scared, that is the time to potentially enter, right? So we don't know, but weekly imbalance gets tapped, and pretty much again this damage here was caused on Friday. So again, we had absolute chop on GU. I haven't touched GU also pretty much since March, since the beginning of March, where we had some profitable trades. Then it just got all messy, potentially in expectation of the tariffs. UK is actually pretty good with the tariffs. I think they only got like 10%, and they're even looking to drop even these 10%. And you can see the pound is reacting pretty violently to the downside. Now, of course, similarly to the market, it responded positively because the dollar flushed. But then this one formed a daily bullish imbalance, which is something that I have been really looking forward to. But unfortunately, it absolutely got engulfed. Okay, and right now we're tapping into that weekly imbalance. But here is why this price action is very tricky right now, because if Monday consolidates, we're gonna have a daily bearish imbalance right now. So it's very important to wait for Monday to close. If Monday impulses, okay, like this, if I just do a bullish candle, all right, and it closes and pretty much crosses above that line here, which is going to be the imbalanced validation line, then that is going to be a pretty bullish sign for me. But if we do form a daily bearish imbalance, then of course what you have to do is wait for it to tap, react, then break the reaction, and then of course start seeing the uptrend. Okay, so a lot of bearish pressure on a Friday here. Okay, and it really looked like what I also kind of expect could happen on the DXY. Remember what I told you? I'm gonna show you like what I mean on GU. Massive rush up. All right, everybody thinks, all right, we're going to the moon, and then whoop, all the way back down. That is a perfect V shape, just flipped. Okay, so of course, like you even saw it from the top here. Again, this is why I love imbalances, is because they show you who is currently in control. We had that hourly bearish imbalance tapped in, massively flushed, yet another one here. All right, and we're also finishing with another one here. So the sellers are absolutely dumping the GU market. And if you compare it to EU looks definitely more like a pullback. I would say that this one looks like it wants to pop higher right now, but GU absolutely dropped. Why? Maybe some of you can tell me in the comments, okay? But looking at this right now, we are currently stuck between a lot of recent bearish price action and also the possibility of the market creating a daily bearish imbalance, and of course that weekly imbalance that is pretty much right now price is collecting all of that liquidity here. So this low, these lows here, these lows here, if there were any buyers buying the breakout, they're stopped out right now if they didn't take profit. Okay, so I'm very interested, right? So for longs, of course, we will need to see tap, react, and then of course to start seeing all the bullish order flow to get respected. And your best setups are going to be occurring pretty much here. When the market has truly confirmed that it's shifting, right? The model right now is becoming bullish towards that high, then of course your best opportunities are going to be here. Don't try to catch the bottom, because there is a lot of bearish pressure right now, and that could also very well be just a reversal, and the market could start tapping into these zones, and if it continues to follow through, then guess what? It's gonna start going lower. Okay, so that is GU. Honestly, again, guys, I'm absolutely not ashamed to say that I don't have a bias, because it would be silly of me to say right now the market is going higher, because honestly, I don't know. I don't have my edge presented right now. That is usually giving me all the confidence that I need. So weekly bullish, daily bullish, hourly bullish, then of course I can say with confidence, okay, I'm bullish. But right now, like, we're getting these mixed signs. A lot of bearishness is coming in on the hourly and the daily. The weekly, I'm not even sure if the weekly is bullish, because judging by that last weekly bearish candle, like, I really need to see that weekly imbalance to start pushing the market higher. And then of course, as the market starts telling me what it wants to do, then it's my time to act, because I don't forecast, I don't predict, I just show up every single day. If there is something clear that the market is telling me to do, I'm gonna do it. Okay, so of course, let's give it some time. Let's evaluate. Are we going to have a daily bearish imbalance, or are we going to start pushing lower in validating that weekly? Very important to give it 1 or 2 days to see what it wants to do. Let's check out Aussie dollar, which is a pair that I do not trade anymore. We're having a pretty volatile month here as well, and a pretty volatile week. And if you study when this happened, it happened on Friday. All right, so that immediately makes the analysis like it looks very good, but it's not as good as it seems. So of course we had that monthly bearish imbalance, and that looked pretty good, of course, for a short towards this low, but the market consolidated here for an eternity, right? So look at when it tapped here. It tapped it it tapped in February, guys. We're in April. Tapped in, tried, came in again, tried, came in again, and finally after 2 months, it fulfilled the target. And how did it fulfill it? On Friday. That's crazy, right? Look at that price action here. I have no idea how can somebody trade Aussie dollar. I have a member of the community who actually passed the 2 challenges, phase 1 and phase 2, trading Aussie dollar. He's trading during Asia. I have no idea how he does it, but he does it. Massive drop here on NFP. Now again, guys, here, what can we do? I can say, okay, I'm sell biased, but can we go short right now? No. The market is taking some massive liquidity. It's the first impulse candle. it's potentially creating right now a daily bearish imbalance, which is definitely something that I would like to see. And of course, if you drop to the hourly time frame to find any sort of areas to go short from, the only area that you have is all the way up here. Okay, so what I would like to see on Aussie dollar is Monday to close to form that daily candle, right? So it doesn't matter where it closes, bullish or bearish, right? This is going to create a daily bearish imbalance here, okay? Because the daily bearish imbalance is going to get invalidated if something like this happens. I don't think this is very viable to happen, but it definitely could. So gonna wait on Monday. If we have one day to create that daily bearish imbalance, then of course pull back into it. I'm very curious to see if we're gonna be continuing that sell-off. Now, of course, we're right now looking at liquidity targets like this, that is already taken. Then, of course, all the way down to March 2020 lows, right? 0.54 on AU, which is absolutely crazy levels. Crazy, right? So did this low get taken? No. Okay, so we still have kind of a little bit of a cleaner liquidity point. Let's see. Of course, I'm going to try to follow that short bias, although, of course, it could be manipulation. But, of course, for that, I'm going to need a daily bearish imbalance to form, which is going to be, again, the first one in a while. And then see if that is going to start following through. Okay, that's Aussie dollar. Let's check out NU. Looking at NZUSD, the first kind of thing that makes sense is that it's not as weak as Aussie dollar is, right? So we saw on Aussie dollar a massive flush here. It's also flushing, but for example, it's not taking out the low yet. Now, of course, NZD dollar is also very close to those 2022 lows, but there are also the 2020 lows. So are we going to be taking these? Could be. Right now, dropping onto the weekly time frame, also extreme consolidation here, just wicks trying down, wicks again, trying, wicks again, and right now it looks like it finally wants to commit lower. Dropping onto the daily time frame, we had extreme chop here. The market again manipulated on Thursday and then Friday. NFP really dumped the market, especially the Aussie and the NZD. And right now, I do see very clear liquidity targets below us. So I could say that maybe some shorts can start kicking in on Aussie and the NZD. Now, of course, I would really love to see a daily bearish imbalance to be created here. So Monday, you have to wait for Monday to form. And then hopefully the market pulling back into your daily bearish imbalance. And then, of course, if that daily is not going to get tapped, there is something going to be stopping it on the hourly. Currently, we have this very little zone. That is still okay, right? But you can see my number here doesn't even occur. That means that it's a pretty small zone. Okay, so I would say something like this. Okay, currently it makes no sense, of course, to try to go long or try to go against that trend and try to say, hey, this is like a manipulation, so it's gonna go higher. It looks like the manipulation already happened, and it happened quite a few times, right? We swept the highs, we tried to push, but it was not enough. We came to sweep again, and right now it looks like it's finally ready to commit. So let's see if we can follow that very recent bearish order flow. And you can see it's not even order flow, because order flow to me is confirmed, right? Higher high, higher low, right? And then confirm a new higher high, which means that, of course, the order flow or structure is bullish. What we have right now is just a drop. Okay, so until we have a pullback lower high and then to start making that lower low, right? Then I can start confirming that order flow and structure. So very simple analysis here. We actually have a hourly zone, unlike AU. We don't have a hourly zone here. On NZUSD, we have it. I would, of course, prefer to wait for that daily time frame to close. Where did my analysis go? Hello? Disappeared. I would wait for that daily Monday candle to close to see if we're going to have a daily bearish imbalance. And then, of course, I would prefer to go short from the daily. All right, let's check out gold. We're finally starting to have a pullback. All right, and gold being a safe haven asset, the market is definitely putting more money into gold. But even gold suffered this week. Like, the panic is so big. So what I didn't like this week is that we invalidated the new weekly bullish imbalance, which means that there is not going to be a weekly level for the market to push higher from. And right now, we didn't even have one last week. So right now, the pullback area for me, even on this highest time frame that I can look at, because we don't have anything on the monthly right now. On the monthly is even lower, right? So these kind of pullback areas, there are a lot lower, which of course it can drop all the way down there. But my first barrier is going to be that weekly zone. Now, of course, is the market going to reach all the way down there? We don't know. How are we going to know? Well, let's read the order flow on the lower time frames. Now, of course, it was quite bullish. I'm a little bit pissed here that last week I couldn't capitalize on these longs here. It came in a little bit unexpected at the wrong time, but that is perfectly okay. And now, of course, getting into this week, we had also all of these bullish imbalances here, like 3 of them. There is this one, and then this one. And then of course, all of them got tapped together, of course, with this break and retest area here where the market responded from with that candle. But then look at Friday. Okay, so if you look at, let me delete all these zones. If you look at Thursday's candle, like a massive wick, what do you expect to happen? Well, potentially the market to go up. Okay, but what did the market do? It closed below this candle's low, which was a wick. It closed below with a body. What does that tell me right now? Market probably wants to seek liquidity because there is nothing anymore to potentially push the market higher, right? All of these zones got tapped and the market is right now breaking them all. So I think also we're having a little bit of a profit taking, or maybe even people are starting to move away from gold, or is it just profit taking from all the massive longs that, for example, institutions have had? So again, similar to, for example, to the rest of the pairs, we're having that 4 hourly, and I would even see here we have a bit more of an order flow because we kind of had that. I actually told this to my team. I think we were doing a webinar here, and I said, guys, like this range here and the market popping and not making a 4 hourly bullish imbalance above looks like a textbook fake out. All right, and we actually did the fake out, then it dropped, right? So we have like this high, and then we have lower low, lower high. Okay, now we have a lower low. So this to me looks a bit more like confirmed order flow. And of course, getting in the beginning of the week right now, we also have some clear 4 hourly areas to short from. Okay, now on the daily time frame, I'm not going to be expecting a daily bearish imbalance. Why? Because the invalidation level is pretty close. If the market actually pulls back on Monday into those 4 hourly imbalances, it can very well invalidate the daily. But in this case, when I have such a strong 4 hourly bias here, all right, and the overall narrative is clear, I do believe the market can be taking out these lows. I will be more willing to go short a little bit more, not prematurely, but without waiting for the daily time frame to give me that clue. So on gold, my analysis is going to be simple. I will be looking for some sort of pullbacks into these 4 hourly zones and a potential drop, simply following that very recent sentiment. Do I think the market can stop here? It could, okay, it could, but again, based on my analysis, I don't think there is something to stop it right now. So I do believe it's going to be seeking the liquidity and maybe come back to rebalance that weekly imbalance here. Okay, so this is my outlook on gold. It doesn't look bad. This is definitely something that I'm going to focus on potentially shorting next week, if of course it's provided. Because again, guess what, guys? The market can open, boom, bullish imbalance. If that happens, guess what? I'm going to be the first one to long it as well, because that changes the sentiment, aligns with the trend. It shows me, all right, hey, the market doesn't really want to go lower. So guess what? I'm going to go long. So always don't predict. If you have something clear like this, the market telling you, hey, it's going short, of course, try to go short. All right. But if it invalidates, for example, a lot of times with my model, okay, if the market's not going to go bearish from here, the lower timeframes are not even going to give me an entry. So I'm not going to take a loss here. All right, if I'm not given the confirmation. And a lot of times I say, okay, I'm looking for shorts from here, but then the market opens and it explodes above. Okay, I haven't taken a loss. That's the beauty of my edge. Okay, so that is gold. Short-term short bias, traveling towards that liquidity, maybe even the weekly imbalance below. Let's see. Let's check out the JPYs. You know that I'm not a fan of the JPYs, especially EJ and GJ, but definitely UJ has a very good kind of place right now, especially in the current market. The yen is safe haven. The market tends to also go into the Japanese yen, and we can see that, of course, for a couple of months right now, this market has been down. So let's evaluate now. First of all, I did expect the market to tap into that monthly imbalance, but again, that's why I have no expectations. And actually, there was kind of a long setup that I shouted to my community, but we didn't get provided an entry, and it was this very small and very shitty weekly imbalance. Now, why is it shitty? It's because this move up, right? Does it look strong? It's like 3 weak candles. Candle 2, which is the most important candle of the imbalance, needs to be expansive. Okay, this one was a rejection. And then actually how this imbalance got created was because the market gapped up. All right. And if you look also at candle 3, it also swept the previous candle's high. So a pretty bad area to be longing from, but we of course observe it to see if it's gonna hold and pushes into the monthly. Well, guess what? It did not, right? And we had a very crazy expansion going lower. Now, of course, this weekly candle is very nicely setting up for a new weekly bearish imbalance, right? For next week, but let's see if we can do something before that. And yes, we can, right? So this is what I like to see. Daily bearish imbalance, all right? Aligning with the break and retest area here to the left, which kind of already got retested a little bit. So immediately, like a clear outlook, I will be looking for the market to create the high of the week inside that daily imbalance and then potentially continue to drop. But it's all potentials, all right? If the market starts printing some bullish order flow, maybe it wants to actually come back to that monthly, you have to always be flowing. Dropping onto the hourly time frame, what I like about this short as well is that right now we're on the way up towards that daily and we do not have anything bullish on the hourly time frame. So of course, if the hourly time frame very simply opens, drives into that daily, and then of course immediately starts giving us the entry models, for example, depending on the time frames you're going to be using, 1 hourly or 50-minute, not going to give away my entry models, right? But you can start looking for an entry model from that daily and then potentially targeting, for example, this is the major low that you're going to be targeting. So let's see. I mean, it looks pretty good. A very nice short introduction. Now, if we have a look at where we are in the grand scheme of things, we had this reaction area that was already taken. We took the liquidity below here. And now, of course, yeah, the next kind of very big area is all the way down there, 142-ish. Okay, so let's see. Following that bearish order flow, we have the bearish imbalance. The market took liquidity. It's already pulling back to rebalance. So looks like a very good technical setup. Now, of course, will the fundamentals support it? That is the next question. But of course, I'm going to wait for price to show me whether it wants to hold from that daily. And of course, as the market starts making on the lower time frame, all the structure you're going to get your entry towards the liquidity. So short bias on USDN. Let's see how it plays out. Well, let's have a look at EJ. I'm approaching it with a little bit of pessimism, right? Not much has happened in the month comparing to what other pairs have done. The weekly time frame here, we have a weekly bullish imbalance that hasn't been tapped yet. Okay, so a rather indecisive candle dropping onto the daily. There is nothing on the daily here, right? It's just like a wick up and then a very sharp spike and then a wick down and immediately coming back up. Nothing to extract here, no daily imbalances, no clear candle anatomy, and then we drop to the hourly time frame. God damn it, how can somebody be trading this? Okay, we have this very small hourly imbalance here. So is this something that I would take a short from? Likely not, right? Likely not. We're coming in with a lot of momentum on the 1 hourly, but it doesn't have a 1 hourly bullish. I don't know, guys. Again, I absolutely not a fan of EJ and GJ. You know that if you have been watching my outlooks, but I still keep covering them because a lot of you want them. I don't know why. I don't know how you're trading these pairs, but I would say like I'm not even short bias on this one. I don't like the daily. The daily is not giving me short bias. It left like these equal highs. Did this one get taken? No, right? I actually do like the longs a little bit more, just judging by all these lower wicks that get printed. But I can say right now, hey, we have that hourly bearish imbalance. Will that imbalance drive us lower towards that weekly? I don't think so, because again, look at the candle anatomy. Look at all the wicks coming from the downside. The market doesn't want to commit going lower. So of course, if we invalidate this and if we start popping higher with bullish imbalances, you can of course follow that. But if we start popping lower, you can then of course target this liquidity low and then look for the market to tap into that weekly untested imbalance to the left. That is EJ, but I wouldn't touch this pair. There are so much better pairs and markets to be trading right now rather than EJ or GJ. I expect GJ to be a little bit better right now simply because of the weakness of the pound that we saw on Friday. Weekly time frame, yeah, we see a very nice expansion going lower. So it took out this first target and right now it's probably going to be headed for that low. Daily time frame, do we have a daily? Ooh, it's finally popping, right? Daily bearish imbalance. It is a breakaway gap though, so we should not be expecting for the market to pull back all the way up here, although it definitely could. And we're going to know that on the hourly time frame. Is there something to short on the hourly time frame? We have this hourly bearish imbalance that is already tapped. And then we have even one small above here. That's not bad, okay? And it's also tapping. Okay, so if these two hourly imbalances right now start pushing the market lower, well, of course, you're going to have a clear liquidity target in the form of this low. And then, of course, that the other major low that we drew. So this looks like one of these immediate setups, but I hate immediate setups. I never trade on the Monday, especially London session. Sometimes New York, very rarely though. But Monday for me, it's always a skip. Just wait for the market to develop, wait to see what it wants to do. I'm only going to take a setup if it's like absolutely super textbook clear. And we haven't had one of these in a while. But it's already reacting from these. You can see the candle anatomy. It's already printing a wick out of these hourly imbalances. So again, your best friend right now are going to be like the 50-minute and the 1 hourly. Are they going to start going lower towards the liquidity? Maybe you can take some shorts. But if they start, if these fall imbalances get disrespected by, for example, some bullish candles here, an order flow on the lower time frame, then that could mean the market might want to revisit that daily. All right. So there are your two scenarios here. And it's going to be a pretty immediate setup because we already tapped them. So if they don't start carrying on lower, the first thing on the market open, then very likely the market might want to go higher and retest that daily imbalance. That is GJ, but of course you much better trade GU because the dollar is a lot more volatile. These yen pairs right now, probably not worth your time. So again, be careful with the markets you're trading right now because that makes the whole difference. All right, guys, let's address the elephant in the room, the US stock market, the futures, options, the S&P, NASDAQ, Dow Jones, they are dying. Okay, so we are currently down 18%, almost 19%. This is on the brink of a bear market because when the market enters 20% drop, it is considered to be a bear market. 10% drop is considered to be a correction. Now, currently, I'm very busy buying the dip. But of course, the dip keeps dipping. My portfolio is overall positive, of course, because I've invested for a long time. But my overall kind of total profit has dropped. However, the value of my portfolio has maintained the same because I invest a lot right now. Because we haven't got something like this in a very long time, right? The last time we did, of course, have something like this was from 2020 all the way until 2023, all right? And that was a 25% drop. I did invest here, right? And then I didn't touch the market pretty much since, 2023 on the way up here. I didn't buy as much, okay? It sucks because I didn't sell as much, but of course I'm investing for the long term, right? But right now we're absolutely dropping. Just this week we're down 10%. Like this thing only happened, for example, in COVID here. COVID week, there we go. That was a 26% drop here in the week. It was even worse. But for example, if you study, COVID dropped 30%, right? The 2020 here slowdown dropped 25%. If you study even past like things here, this one 40%, this one 50%, right? But this is 2008, like come on, right? And this is 2000. So I think we have potentially more downside, and especially if all the other countries do not cooperate for the US. Like the US is acting all cocky and stuff right now, but we see China is answering negatively, of course. So if there are no deals to be reached, the recession is going to come in and we can very well fall above 25 to 30% on the S&P, taking us all the way below, for example, this low in terms of technicals, right? That is a 30%. Like if we fall towards that low, goddamn, all right? I've studied some charts, the market really takes out that very major higher low. Like for example, you can see COVID, right? As the market was up there, who would have thought, oh man, how can the market drop 30% and break this higher low? It doesn't, okay? Those are very clear liquidity levels, right? For example, here as well, the market looks up and then you think, okay, well, you draw your FIP and you say, all right, we're not going to really go lower. It drops, takes the liquidity, but those are the absolute best buying opportunities as well. So again, like lows like this, lows like that, so we can absolutely take them as well, because right now the market is coming to its mean value, right? This overall push here was very extended, and right now, I always do believe that the fundamentals are done in a way to pretty much balance the market, because for how long could have this gone higher, right? So here comes Trump's, and of course drop the stock market to drop to its fair value. And of course, a lot of people are exiting right now. A lot of hedge funds I read are getting margin calls, and the lower it goes, the lower it's gonna go, okay? But of course, I absolutely shorted the hell out of the market as well in terms of futures, made some really good profits. And of course, I keep buying, right? All below all these levels here, so all these support levels, all these liquidity levels, I keep buying. I started buying all the way from here as well, right? When it dropped 6%, I bought. When it dropped 8%, I bought. When it dropped 10%, I dropped. When it dropped 16, I bought. And when, of course, it drops even more, I'm going to keep buying, of course, on a dollar cost average basis. So again, to check out on the technicals, very beautiful development here. We had that weekly bearish imbalance, and then of course since then we absolutely dropped. Now of course we dropped on tariffs day, so it kind of happened a little bit late in the night, and this is kind of when we started popping here. And then of course it gapped down. We had a bearish day on Thursday, but then yesterday when China responded negatively, it just dumped. Now, of course, we do have, for example, in terms of technicals, these daily bearish imbalances, but I would say let's wait for Monday to form a new daily bearish imbalance here. All right, so let's wait for Monday to close, print a little candle here, no matter how it looks, to form that daily bearish imbalance. And of course, then from there, we can look for a pullback and a potential drop. Now, of course, in terms of liquidity targets, these are all kind of the old lows. And of course, you can even look at imbalances, but there are not many, right? You can even look at the monthly time frame. There was one here. Yeah, so for example, this here is a very good supportive level because it's a liquidity level also supported by that monthly imbalance. So we can, I definitely do think we have more downside. Okay, definitely more downside. And of course, if you drop to the 40 time frame, it was absolute flush here on Friday. It just kept flushing and flushing and flushing. I took a lot of trades. But hourly bearish imbalance is all the way up there. We don't have one right here. So of course, guys, again, with indices, my approach is literally just jump into the New York Stock Exchange market, see how the relationship is between Asia and London, how it's developing, what kind of imbalances are being tapped, and who is taking control on the open. Okay. So right now, of course, as we open, I would be looking for a consolidation, maybe potentially to take out Asia and London high. And then, of course, if you start getting the bearishness, I will be looking for further sell-off because, of course, the sentiment is absolutely bearish right now. I'm really, especially with trading, I'm really not going long right now. Not going long, of course, until the market starts going higher. I took some longs here as it went higher, but I'm not going long right now. My full focus is going short, of course. And the shorter it goes, the more I buy stocks and the more I buy the dip, and the dip keeps dipping. But when we pop higher, it should pay off. So that is ES, of course. In terms of technicals, not much to discuss, but I do believe it's going to keep dropping. Any new hourly bearish imbalances, any new daily bearish imbalances that get tapped, those are probably going to be some very good short opportunities. And always make sure to watch the news. Okay, because if some deals start being made, we still have time until the 9th of April. Carefully monitor the news and what is happening because things can take a very quick turn. But the market erased, I think, 5 trillion or something with all these shorts. So there is very likely not going to be a V-shaped recovery. It's going to go very slow. And I do believe we can get into a recession as well. And that could take us like 1 or 2 years. So, of course, patience. The tech stocks are being hit the worst as well. I have been buying some tech stocks. For example, I didn't own any Amazon and Google, and I have been stocking them up a lot right now. But of course, the position is definitely in drawdown. We are actually in the bear market on the Nasdaq. Congratulations, 22% down. That is a bear market officially right now. The market is pulling back over towards this kind of fair value area. The market dropped, it impulsed, right now it's coming back. You can, of course, start drawing your pips as well. But of course, currently we're getting into that discount here, that 50%. We could drop a little bit more lower towards that golden zone. But of course, like the very worst outcome that I would expect is for us to drop all the way to like 13 to 12,000, which is this very major higher low. All right. And if we measure this, right, that is a 44% drop. Is this possible? It is. Like if you study, the market has dropped that much, right? 33 here, COVID was 27, Nasdaq not that much, right? 19, okay, I take my words back. This one was, I'm not gonna measure this, 2000 here, 2009. So like, don't try to even call the turn, but why I do these things is because I kind of want to have some expectations about like until when I want to buy, okay? So currently we're buying below these lows, investing in stocks again. Then we can start buying at these, for example, monthly bullish imbalances here, because those are all support levels that if you're looking to get the best price for your stocks or ETFs, those are the best place to be buying. Of course, if you want to be more conservative, right? So for example, you can plot the VWAP at the top and you can wait for that to get broken until you buy, right? But imagine you buy at 20K, right? You're losing out on 16% profit. Okay, so this is not how I approach investing. Okay, I'm buying the dips. Now we're getting close again towards that monthly level. This is also, for example, another monthly here order block. This is very massive sell to buy. There are going to be some kind of supportive levels, but again, but what is the current sentiment? It's absolutely crashing. Okay, so we keep going short. Weekly bearish imbalance here, holding, massively impulsing. Now, of course, that is gonna be a very nice predisposition here for a brand new weekly imbalance. But of course, we have to wait for a whole week to pass. And of course, in the meantime, we are going to be trading the hourly, the daily, and the 1 hourly. Here we have that daily imbalance. it's gonna be very nice to wait for Monday to play out here to form a new daily bearish imbalance. Then of course any pullback into these kind of daily imbalances, for example this one here, it is a shorting opportunity. So waiting for these to form, and I'm gonna keep shorting on my futures accounts, of course, until we start seeing the uptrend. All right. And now, of course, if you have a look on the volatile time frame here, we have that volatile imbalance. Not a lot of technicals right now because the market really dropped hard, like 7%. I know some prop firms are even shutting down after a certain percentage drop in order to ensure like the spread and the opening do not like blow the traders' account. But currently nothing on the 1 hourly as well. So again, I'm going to be looking for Monday to open. Hopefully give a little bit of a pullback, and then of course during the New York session you can immediately start shorting it. And of course my next target is going to be that monthly bullish imbalance here. I might buy some more stacks as the market gets around this kind of area, but I definitely do think this low can get taken out as well. Like again, if you study the drop 30%, that's pretty nice. That's a very large drop, so we can definitely get there. And then of course anything below that, I would start getting skeptical. We really need, things really need to get very bad. But of course, if you also study companies, okay, companies are making money. They're still profitable. They're still doing good. So as long as the companies keep making money, keep doing good, and are not impacted by tariffs that much, like the only kind of company I own is that is impacted a little bit by the tariffs is Apple, right? Just because of their physical goods, right? The phones, the tablets, the MacBooks and stuff. And Apple will definitely feel a little bit more, right? But other companies like Google, for example, that is offering digital services, like I don't see how much it could get impacted, for example, right? But of course, that's that. We keep shorting any sort of pullbacks, definitely selling opportunity. My main focus is to wait for that daily bearish imbalance to form, and of course, to keep shorting it from Tuesday onwards. Of course, the Dow is also dropping from the top. We're currently 16%, so it still hasn't entered bear market territory. The very recent kind of reaction area and support that I see is that monthly bullish imbalance. But we're flushing very badly. The weekly time frame also very nice bearish weekly candle. A very nice predisposition for a new weekly bearish imbalance here coming into the week after the incoming week. And then of course dropping onto the daily time frame, again the daily bearish imbalances are here. I would definitely wait for this one to form a new daily bearish imbalance here as well after the Monday candle closes, print a new one, and then of course continue shorting it. Okay, now of course the analysis on all the indices is the same. We have like that upper daily imbalance, and then we have like one or two hourly bearish imbalances, but I'm just waiting to see how Monday is going to play out. Is it really going to continue crashing immediately on the open? Are we going to have a little bit of a profit taking, a little bit of a pullback, and then of course to resume the drop? I would definitely love if we have a pullback on Monday, and then Tuesday taps into the daily imbalance, and then of course we start targeting the fresh, which then are going to be the previous weekly lows. Okay, so that's that, right? So like in terms of the Dow, like how far can we drop? We definitely have a lot more space. Just 16%. This one can definitely drop 25 to 30, right? And 30 takes us all the way down to this low. All right, so targets like this, and then of course the next target is gonna be target like that. So we still have like two of these major liquidity lows to be taken. And of course, if the market and the tariffs develop like they are right now, a little bit more negatively than expected, and if the other countries start to respond, I definitely do think the stock market has a lot more downside if of course this develops. But of course, keep buying the dip because you don't know when it's gonna stop. Just of course, make sure to manage your money well. Even the Euro stocks are falling right now. DAX, that looked extremely strong. It actually looked a lot better than the US indices, is also right now starting to take a little bit of a tumble, being down 13% from the top. But of course, it was time for this one to also give a little bit of a pullback. It is pulling us back into that monthly, that monthly bullish imbalance here. But looking at that very recent bearish momentum, I am going to disregard that monthly bullish and not really try to go long from it, right? Look at that candle here. Really got hit 10% drop. Like, guys, that is a lot of money. That is a, if you think about the stock market returning on average 10% per year, we dropped 10% this week to the downside. All right. That kind of makes me a little bit optimistic about the upside as well, because if we drop for one week 10%, well, the upside then should be huge at the end of the day, right? If you buy that dip, right? But of course, it's crazy. This bearish candle is setting up very nicely for a new weekly bearish imbalance, but we have to wait for that. And then of course on the daily time frame, that Friday was extremely impulsive. Like it really all happened on Friday. right? Thursday, you can see a little bit slow, but then Friday absolutely dumped. So very similar to the US indices here. I would wait for Monday to close, create another daily bearish imbalance, and then I'm going to be looking to short from there, because again, you have like the only area that you have right now for shorts is this forward imbalance, and that looks like quite the big pullback. So I would definitely be looking for the daily. There is nothing on the 1 hourly. Very simple analysis here, waiting for Monday to close, form that daily imbalance, right? Give us a little bit of a pullback, and then of course continue to drop lower. That is DAX. Let me know if you guys are trading DAX, by the way, because I don't at all. I actually want to stop analyzing it, but I keep covering it. So giving a recap right now is a little bit hard because I don't have a very fixated bias, and I usually don't. I'm always showing up every single day and of course looking at what is happening right now. I would say I'm more inclined bearish on the dollar, pulling us back into that daily imbalance here, and then of course starting to see the bearish order flow, which means bullishness on EU. EU is very 50-50. We really need to see like how it's gonna start picking up from this place, because this place here is kind of a 50% of the very last push up. It's having like these forward imbalances. It doesn't have a daily bullish. It doesn't have forwardly bearish. So it's very 50-50, while GU is in an absolute reversal mode, tapping us into that lower weekly imbalance that we have been looking for quite a long time. So the very key question is right here, are we going to start holding bullish, or are we going to continue bearish? It needs time. Aussie dollar and NZD dollar absolutely dropping, so we can definitely look for some shorts on these two pairs. I would prefer daily imbalances to form on these two, and then of course trade from the daily. Gold is also very 50-50, but I actually see a pretty good short setup here because the forward time frame already took liquidity, lower low, lower high, lower low. It's already establishing the order flow, so I would look for these forward zones to get tapped for a potential drop. USD JPY also looks like a very clear daily imbalance short here, pullback, and if it starts giving us the bearish signals, I would be looking for the shorts. EJ and GJ quite choppy. I like GJ a little bit more simply because the GBP is very weak, while the euro is a little bit more stable, and you can see here it's absolute chop, while GJ, it could give us some shorts. And of course indices, in terms of trading, like it really depends on how you're operating with it, with indices or futures. Are you investing or are you trading? If you're trading, absolutely shorts, looking for Monday to potentially close to give us a little bit of a pullback and to print a daily bearish imbalance, and then of course looking to keep shorting it like on Tuesday, Wednesday. We have CPI on Thursday, and we have on Friday a lot other news as well. So I think we can have maybe a little bit of a slower beginning of the week, but of course with all the volume and with all the fear and panic that is incoming right now, I don't think we really need kind of economic data to make market moves. The market is probably just going to keep flushing. The same analysis on all the indices, daily imbalances on ES, NQ, and YM, a little bit of a pullback potentially to actually get a lower high, and then continuing to short. So let me know, guys, how you developed this week. Did you take any Forex pairs? Did you kill the indices shorts? What did you do? What do you expect to be happening going forward? Maybe comment on tariffs a little bit, comment on your favorite technical setups. Let me know in the comments, and of course, if I see something worth updating, I'm gonna update you on Wednesday.